Hey, listeners, are you ready to take control of your car buying experience and make smart financial decisions? Introducing the Ultimate Auto Finance Guide, your go to resource for navigating the complex world of auto finance. Whether you're a first time buyer or looking to refinance, this guide has all the tips, tricks, and insider knowledge you need to secure the best deal. Don't miss out on this opportunity to empower yourself and drive away with confidence. Head over to www.ultimateautofinanceguide.com now and grab your digital copy. Trust me, it's the smartest investment you'll make before buying your next car. Welcome to Drive to Success Mastering Auto Finance. I'm your host, John Lewis, and today we're talking about trends that are reshaping the auto finance industry, generational differences in how Americans approach car buying and financing. Whether you're a dealer, lender, or consumer, understanding these generational preferences isn't just interesting, it's essential for success in today's market. From Gen Z's digital first approach to Gen X's traditional financing methods, each generation brings unique expectations, priorities, and pain points to the car lot. So buckle up as we explore how three generations are driving change in auto finance and what this means for your business and your next car purchase. Let's start with the numbers. According to recent industry data, a fascinating shift is occurring in auto financing preferences across generations. Gen Z, those born between 1997 and 2012, are now entering the car market in force. Millennials, born between 1981 and 1996, represent the largest share of car buyers today, and Gen X, born between 1965 and 1980, remains a significant force in the premium and luxury segments. But here's where it gets interesting. Each generation has fundamentally different approaches to the financing process itself. Let's start with Gen Z. These digital natives are revolutionizing how we think about auto financing. They expect everything to happen online, from research to application to approval. In fact, 78% of Gen Z buyers begin their car shopping journey on their smartphones, and 65% prefer to complete the entire financing process digitally. What's driving this preference? It's not just convenience, it's transparency. Gen Z values clear, upfront pricing and financing terms. They're skeptical of traditional dealership tactics and want to see all fees, interest rates, and payment options laid out clearly before they even set foot on a lot. Here's a key insight for dealers and lenders. Gen Z is willing to pay slightly higher rates or a completely transparent, hassle free digital experience. They value their time and emotional energy more than squeezing out the absolute lowest rate through lengthy negotiations. Now, millennials present a completely different picture. This generation, shaped by economic uncertainty and the 2008 financial crisis, approaches auto financing with a focus on long term value and financial optimization. Millennials are the most likely to research financing options before visiting a dealership. They're comparing rates from credit unions, banks, and online lenders. They also are the most likely to consider pre owned vehicles as a wise financial choice rather than a compromise. Interestingly, millennials show the highest preference for longer loan terms, 60 to 72 months, not because they can't afford higher payments, but because they're strategically managing their monthly cash flow to invest in other areas such as real estate or retirement accounts. This generation also shows the strongest preference for gap insurance and extended warranties, viewing these as innovative risk management rather than dealer profit centers. Gen X takes a different approach. They value relationships and face to face interactions in the financing process. While they're comfortable with technology, they prefer to use it for research rather than transactions. Gen X buyers are most likely to establish relationships with specific dealerships in return for multiple purchases. They're also most likely to finance through the dealership rather than bring in outside financing, but they expect to be treated as valued customers with personalized service. This generation exhibits the highest loyalty to specific brands and the strongest preference for new vehicles over used ones. They're also most likely to trade in vehicles before the loan is paid off, viewing cars as tools rather than investments. Now, let's talk about what these differences mean for payment preferences and loan structures. Gen Z shows the strongest preference for flexible payment options. They're interested in subscription based models, biweekly payments, and seasonal payment structures that align with their often variable income streams. They're also the most open to alternative credit scoring methods that consider factors beyond traditional credit history. Millennials prefer predictable, optimized payment structures. They want to understand precisely how much they'll pay over the life of the loan and often choose lower monthly payments to maximize their financial flexibility elsewhere. Gen X prefers straightforward, traditional payment structures with the option to pay ahead without penalties. They're the most likely to make additional principal payments and value the ability to build equity in their vehicle. Here's where the generational divide really shows up. Gen Z expects real time updates throughout the financing process via text or app notifications. They want to upload documents through mobile apps and receive instant pre approval decisions. Millennials want technology that empowers their research and comparison shopping. They use apps and online tools extensively for rate shopping and payment calculations, but they're comfortable with either digital or in person final transactions. Gen X uses technology for convenience but values human interaction for complex decisions. They're most likely to research online but want to speak with a real person before signing financing documents. Let's dive into some practical implications for dealers and lenders. For dealers, first, diversify your approach. You can't use the same financing presentation for a 23-year-old Gen Z buyer and a 50-year-old Gen X buyer. Train your finance managers to identify generational preferences quickly and adapt their approach accordingly. Second, invest in technology that serves all generations. This means having robust online tools for Gen Z and millennials while maintaining strong in person service capabilities for Gen X. Third, understand that each generation defines value differently. Gen Z values time and convenience. Millennials value optimization and transparency. And Gen X values relationships and service. For lenders, consider developing generation specific products. This might mean offering app-based applications for Gen Z, comprehensive comparison tools for millennials, and dedicated relationship managers for Gen X. Also rethink your credit evaluation criteria. Gen Z may have a limited credit history but have strong income potential. Millennials may have been impacted by economic downturns but show strong financial responsibility. Gen X may have complex financial situations that require nuanced evaluation. So, looking forward, here's my prediction. We're going to see these generational preferences start to converge in interesting ways. Gen Z's demand for transparency is pushing the entire industry towards more upfront pricing. Millennials focus on optimization and driving innovation in loan structures, and Gen X relationship preference is reminding us that personal service still matters. The most successful dealers and lenders will be those who can seamlessly blend the digital efficiency that Gen Z demands, the value optimization that millennials expect, and the personal service that Gen X values. Let's talk about three specific strategies for success. Strategy number one: flexible financing menus. Instead of a one size fits all approach, develop financing menus that cater to different generational preferences. Offer quick digital approvals for Gen Z, comprehensive comparison tools for millennials, and personalized consultations for Gen X. Strategy number two: communication preferences. Respect generational communication preferences. Gen Z wants text and app notifications. Millennials prefer email with detailed information. And Gen X values phone calls and face to face meetings. And finally, strategy number 3, education and transparency. All generations benefit from education, but they want it delivered in different ways. Gen X prefers video content and interactive tools. Millennials prefer detailed articles and comparison charts. Gen X values expert consultation and printed materials. Let's address some common misconceptions about generational preferences in auto financing. Misconception 1: Gen Z can't afford new cars. The reality is that Gen Z is entering their prime earning years and represents a huge growth opportunity. They may finance differently, but they're serious buyers. Misconception 2: Millennials are cheap. Actually, millennials are value conscious and will pay for quality and service that aligns with their priorities. They're optimizing, not just minimizing costs. And misconception 3: Gen X is stuck in the past. While Gen X appreciates traditional service, they're sophisticated consumers who use technology extensively for research and comparison shopping. Bottom line, the key to success in today's multi-generational auto finance market is understanding that different doesn't mean better or worse. It just means different. Each generation brings valuable perspectives and substantial purchasing power to the market. The dealers and lenders who succeed will be those who can authentically serve all 3 generations while staying true to their core values of transparency, value, and service. Well, that's a wrap for today's episode of Drive to Success Mastering Auto Finance. Remember, whether you're 25 or 55, the key to successful auto financing is understanding your options, knowing your priorities, and working with professionals who respect your preferences. If you find today's episode helpful, please subscribe and email us. Leave us a comment at masteringautofinance@gmail.com. Your feedback helps us create content that serves the entire auto finance community. And until next time, keep driving towards success.
Rolling down the avenue to a jazzy beat, following that rhythm, life's a one-way street. Chasing dreams with passion, every mile's a goal. In the world of finance, stories to be told. Catching the horizon with a soulful groove. Navigating numbers, got nothing to lose. Every calculation, every deal we sway. In the realm of autos, we find our way. Drive to success, we're mastering the art. Through the lanes of finance, we set apart. Jazz and soul, where the numbers align. Make your journey smooth with wisdom divine. Hit the keys of knowledge, let the insight play. From leases to purchases, every savvy way. Revving up those engines, zeros turn to ones. In the studio of life like morning sun. Feel the soul, embrace the jazz. In the auto world, let's razzmatazz. Financial gears shifting smooth and slick. In the podcast lane, we find the tricks. Cruising through the jargon, ain't no mystery. Unlocking all the secrets in auto history. Low ones and rates, they glisten like the stars. Drive the distance, no matter how far.
Thanks for sticking around until the end. Before we go, if you're in the market for a new or used car or even thinking about it, you must check out Drive to Success, the Ultimate Auto Finance Guide. It's packed with strategies to help you navigate the tricky world of auto financing, avoid costly mistakes, and get the best deal possible. Head over to Amazon and grab your copy today. Just search for Drive to Success, the Ultimate Auto Finance Guide, or use the link in our show notes. Take control of your car buying experience and drive away with confidence.